following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
All right, everybody, that rocking music means it is time once again for the Option Block, your bi-weekly dose of options, wit, wisdom, hilarity, and occasionally some insight and education thrown into the mix as well. I am, as always, your host, Mark Longo from the OptionsInsider.com, as well as the Options Insider Radio Network. And before we go, I want to make sure that I remind you to check out the latest addition to our Options Insider Radio Network. If you like this show, in particular the trading block, we've drilled all of that down into one short 5 or 10 minute show we're calling the Options News Rundown. It hits all the top headlines from the world of options. I encourage you, check it out. You can find it on the Options Insider, iTunes, Stitcher, TuneIn, Aha Mobile, wherever you get your podcasts of choice. You can find that new program as well. I encourage you to check that out. And we're going to mix up the old panel today because good old Uncle Mike Tusaw is off in sunny and scenic Mexico. I'm not sure why he'd want to leave Chicago in March to go to Mexico. It seems crazy to me. But nevertheless, he has done so. So I am joined by an able fill-in, someone we haven't had on the show in far too long, in my opinion, formerly known as FCM, a.k.a. FHM, Federal Holiday Mike. I think I can remember my acronyms by this point. He is none other than good old Uncle Mike Kavanaugh, or Mr. Federal Holiday Mike, a.k.a. Mike Kavanaugh from RCM. Mr. Kavanaugh, it's been far too long, sir. Welcome back to the show.
It is great to be back. It has been far too long, and I think we're out of the federal holiday Mondays of January and February, so now we're back on schedule. We're going to have to come up with a new nickname now that we're over here at RCM.
You'll be the once a quarter Mike.
Yep, quarterly Mike.
OAQ Mike? It doesn't really have that much of a ring of a bell. I don't know. We'll come up with something better, I think.
Quarter Mike.
Yes, quarter Mike. There we go. Quarter Mike. I like it.
Great to be here. Great to
have you back. Got to do it more often than once a quarter, sir. And if you want a dose of Federal Holiday Mike, you, of course, can find him on our other program, The Advisor's Option. That's our monthly look into the realm of financial advisors and what they're doing with options, what they should be doing, what they could learn when they're using options in their portfolio. So check out that one as well if you want more Federal Holiday Mike in your life. And then again, who doesn't, really? And last, but certainly not least, because there appear to be some Wi-Fi issues over there in the land of OX, so we won't be joined by the Viceroy today, but we have none other than the Rock Lobster beaming in from the great state of Maine to take his place. Good old Mr. Giovinazzi, welcome back to the program, sir.
Thank you very much. It is always, as usual, it is a pleasure to be here, and I'll just say, although nobody's going to understand what this means, Kyle is earning his money today.
Yes, Kyle always earns his money on this program, but today in particular, we're jumping all over the place today.
He gets double. Today he gets hazard pay for editing this show.
Don't put any bad thoughts in his mind, sir. All right. With the team, for the most part, assembled for whatever team we could cram together. But because we have a light team, we're going to give you an extra surprise this week, dear listeners. And we're going to add an interview block into the rotation. I know you guys love those. So I think we'll dive into that right now and roll right into the interview block.
The interview block.
All right, and welcome to the interview block. This is, of course, the portion of the program where we welcome on a guest, a luminary from throughout the world of options and derivatives, and we proceed to pick their brains about their latest developments going on in the financial realm. And today's guest is Joe Garcia-Rios. He is the founder of Rios Quantitative. He's also the president and chief portfolio manager over there for Advanz Analytics, a commodity trading advisor. Joe, welcome to the program.
Thank you for having me.
And Joe, as we are wont to do with all of our first-time guests here on the program, why don't you go ahead and give our listeners, I gave them the quick touch points, but why don't you go ahead and give our listeners a brief overview of your background in the financial markets and how you got to be over there at Rios Quantitative and what you guys do over there?
Okay, well, I started about 24 years ago on Wall Street. My first job was with Prudential Securities. They had a managed account program called the Quant program, and it involved fundamental, technical, and quantitative analysis, and that's where I began my quantitative schooling. And from there, I went to Citibank, ultimately Smith Barney, and then I went on my own. So from the very, very beginning, my approach has been very tied to technology. So obviously, during the technology boom, the information age back in the mid and late 90s, it made the type of work that I do a lot easier with, software and high-speed computers. And that's when I decided to, go on my own. So I've been on my own since then. And besides managing funds, we also develop technology, trading technologies. And we have a very nice membership base that uses, our same approach to the markets.
So you obviously have a CTA. Perhaps we'll start there because I know that will resonate with a lot of our listeners. Tell us some of the strategies, and maybe we'll even get even more basic. What are some of the products you really focus on there in your CTA? And then we can get into some of the strategies and tactics you employ in the fund.
We do a lot of correlation analysis. So we have software that helps us measure and assess, market environments. And then we, of course, all of our strategies are pretty much computerized. So from the analysis model, we then go into the alpha model, and we have 2 or 3 different signal models that will get us, in and out of the markets. And of course, as quant, we also have a money management model. One thing that set us apart a long time ago when we first were becoming more computer-driven was in the FX space. We developed at that time one of the first auto execution platforms that would automatically execute our alpha model through multiple different clearing firms in the FX space. And from there, we've just migrated over to the futures side of the business. Now, futures being, exchange, where all the trades are exchanged, the technology is not as proprietary as it once was, or as it is in FX. But nonetheless, it does provide us an edge in the FX space.
So the focus of the CTA then is on the FX. You're not out there, let's say, trading oil against the metals or something like that.
No, on the FX space, it's foreign currencies and relationships to the risk assets, the risk currencies, the natural resource type of currencies. And then what we've had a lot of success in is being able to identify aggressive accumulation and then match it with aggressive distribution on another currency. And that gives us more of a follow through and more momentum, directional momentum. So we've been pretty good at that. That has made a big difference in our performance when we're able to do that.
Now, you mentioned the futures. Obviously, you have a strong focus on the underlying. Are you incorporating options into that too? Let's say you have, a bullish outlook. Are you doing verticals or ratios? Are you hedging with options? In what way are you incorporating options into what you're doing over there at the CTA and as well as at Rios Quantitative?
On the CTA side, we do not trade options. We have members with our technology that do trade options. And what they'll do is that they'll take a little bit longer term position, and instead of buying going long crude, they'll do options on some of the ETFs, so they'll do options on the futures themselves. What we do on the CTA side is we close everything out at the end of the day, so we don't take positions overnight. But we have members, and we have some guys here on my trade desk that trade as well, that take positions a little bit longer term than we do in the CTA. In other words, anywhere from 2 to 6 days.
It's one of the benefits of focusing on the underlying on the futures market. A little easier to get flat in that environment. You don't have as many lingering positions, lingering gamma, lingering vega floating around as if you were trading options all over the place.
Right. Correct.
Oh, yeah. Hello. This is Andrew from OptionFit. How you doing?
Hi, Andrew.
I guess my question is, so from a client point of view, do you send signals to your clients on what you're doing with the CTA, or did I miss part of you just run the fund specifically, and then clients kind of take your signals and sort of roll with it?
What we do on the CTA side, we do not send signals to clients whatsoever. On the software side, where we call our members, not our clients, but our members, they trade with our software for their own accounts. So we pretty much, what we do with our members, we have a 90-day program where they first come in for 2 or 3 weeks. They test drive our software, our trading platforms. By the way, we do this live every day from 8 o'clock to 11 o'clock. So our customers or our members, plus potential customers that are looking to look at our software, they'll see us trade it live every day. And then from there, the ones that want to become members, then they become members, and we train them, and we put them on a 90-day program where we take them under our wings for 90 days, and we show them how we trade our software so they could do it themselves. It's not a black box. It is, I'll tell you a little bit about what it is. One of our models that we have, and I'll divide it up into models. We have one model that's we call it DMS, is a dynamic market sentiment indicator. It's proprietary, yet our members have access to it. Obviously, our members are active traders. They're not managing their 401ks. These guys are doing this for a living. So that's one of the models, and then we have other models that help them select, which markets to trade and which direction. And then there's another model that it's the alpha model, the signal model. And that will sit on their platform, on their desktop, on their trade station. It won't be us telling them, we're going long, so you should be buying long. Gotcha. They'll be making their own decisions.
So you kind of give them the software tool to get them going, and then they sort of take it and morph it into intraday or, more long-term trading. Long-term relative, right? 4 or 5 days, something like that.
Correct. 70%, 80% of our customers, close out the positions at the end of the day. They pretty much follow the same style of what we do. But we have a good, 20 to 30% of our customers that just do a little bit different time frames, and they get into positions that last, 2 to 7 days. Correct. And we do have a few that trade options, by the way, on these signals or on these approaches that we do in selecting the models and the direction.
Now, Joe, one of the reasons we had you on today is because you're jumping on the RCM webinar train later on this week and doing a webinar with those guys over there. Uncle Mike, unfortunately, couldn't be here to discuss your webinar in person, so why don't you go ahead and give our listeners a little bit of a taste, a little bit of a tease of what you're going to be talking about later this week.
Sure. Well, we're definitely going to show some of our software in our approach. And of course, I believe it's at 9 p.m. Eastern time. Is that right, Mark?
That is correct. This is Mike Cavanaugh chiming in.
Hey,
it is. It's 9 p.m. Eastern on Thursday. If anybody has any questions on how to get to that, Joe can leave his contact information. My information is mcavanaugh@rcmfs.com, and I can send you the details for the webinar.
Okay, so it'll be obviously after the markets are closed. So we're going to explain briefly how the software works, and we try to answer 3 questions. Our software will try to answer 3 questions, for our users. What is really going on in the markets? Who is in control? How can I profit? So that's what we're going to try to, in our presentation, is show how our software provides those, answers to those questions. And then they'll be invited, the next day or for the next 2 weeks to join us in a live trading environment where we trade our software, our signals, in a real-time live environment.
I suppose I would be remiss if I didn't ask you, since you do a lot of fundamental and technical analysis in your funds, and of course we're recording this on the day when we set yet another consecutive all-time high out there in the Dow. It seems like up and away for the markets. What are some of the signals you're seeing right now in your various funds out there? Are you thinking we're top heavy, or thinking we're due for a retracement? What are some of the things you're looking at in your various systems right now?
Okay, I'll tell you. On Friday, following the report, we've had pretty decent economic data, surprising to the upside. And on Friday, we have the 10-year yields, I think, that popped a little above 2%, which has been the top end. And interestingly, the dollar index also popped up higher. And, so I think it may be too early, and we've definitely had a lot of false starts. But, a strong dollar, weaker bond market, stronger yields, there's a correlation there. I don't know if it's too early to say that, that's the canary, in the mine. But I think we're going to see volatility going forward. The equity markets have been, like any typical, liquidity-rich environment, has been moving up like a slow escalator. But when these things when some of these trades begin to unwind, they come down like elevators. And we do think that trade is kind of crowded. So we're looking at what the currency market and the bond markets might be telling us. These are early signs. So I love to trade volatility. And I think the risk, obviously, in the markets right now is to the downside. Or the risk of volatility, the risk of more volatility would be to the downside in the equity markets. Crude oil and copper have not been participating with risk assets on the rise. So that's been interesting as well. And I've been keeping a close eye for crude and copper to break out of their ranges. We had a small, profitable trade in crude this morning, but it's still in a range, and I'm waiting for it and hoping for it that it'll break out of these ranges. So the correlation are not to one right now. They're not all positive. So we're just trying to see, what these markets are telling us. Our software, by the way, is designed to try to read what the market is telling us, or helps us interpret the correlations of what these different markets are looking at. And, that's where we're at right now.
Hey, Joe, this is Mike Cavanaugh. Thanks for coming on today. Just a quick question. You said that your programs aren't kicking out the actual trading programs for the options, but you said your software does, you have users using the software that use the options. Do you ever get any feedback from them on, their interest in the options? Is it to manage the risk of the futures positions? Are they enhancing the profitability? What kind of feedback have you gotten from your software users as far as what their intentions of the usage of options with the trades are?
They're using it as leverage. I've got a small group of guys here, 3 or 4 guys on my trade desk. They're trading their own accounts using the signals, and they're going out and buying options. They basically either buy calls or puts. They're directional trades. They're not putting on anything fancy, and they've been doing extremely well. They're just getting more bang for their buck on some of these directional trades. I do have a couple clients that take one of our very basic services, which is a trend analysis ranking that ranks the major asset classes, and I've got when these things go into a bullish or a bearish ranking, they'll go out and they'll either go long the underlying or they'll buy calls or puts. And these guys have been doing extremely well in the last 3 or 4 months.
Yeah, that's one of the best ways to implement a technical and fundamental type strategy like yours is if you see a signal that you like, obviously use the options to act with much more leverage and much more decisiveness than just using the underlying. At least that's what we talk about here when we're doing the show here.
And less risk. Well, let me give you an example. We had a signal, I don't know, but off the top of my head, could have been 2 weeks ago, a short signal on euro. Well, you could have gone to the FX space and shorted euro. But then to have your stop loss, decent stop loss, you have the risk of these intraday. When I say intraday in the FX space is within 24 hours, you could have a report out in London. You're sleeping, you wake up, and you got filled on a stop loss that you really didn't want. So what some of these guys do is, if their stop loss is $5,000, just to use a number, they'll spend $5,000 on puts. And that way, if these things retrace, they're not worried about their stop getting hit. Because a lot of times and especially in FX, it can become fairly volatile. It'll snap on an economic data release, hit you on your stop loss, and then go back to the trend that it came from. So that's I have guys that have been very successful applying it that way.
Yes, we see we counsel that quite a bit here on the show about using options to avoid precisely those scenarios, those whipsaw type scenarios that are so common in the commodities and in the FX realm, where you could have a stop hit that you really don't want to have a hit and really wasn't a viable stop to begin with because the market only touched it, but because it did, you're in there now. Whereas options tend to mitigate a lot of that whipsaw type effect. Well, Joe, that's about all the time we have today. I really want to thank you for coming on the show today. I encourage all of our listeners to check out your webinar. It is going to be Thursday night at 9 p.m. Eastern. As good old Mike Cavanaugh reminded us, you should be able to find a registration link on our website, theoptionsinsider.com, when this show goes live. You can also find it over at the RCM website as well. In the meantime, if you want to check out what Joe and the guys are doing over there at Rios Quantitative, then by all means, surf on over to Rios Quant. That's RIOSQUANT.com. And Joe, is there somewhere they can go to check out your CTA as well?
Advanz team, it's ADVANZTEAM.com. That is at the website for Advanced Analytics. That's my CTA in business since 1997. I also started a blog a couple of, maybe a week ago, and that is thetradingroom.com. And it's got, pretty interesting information and a couple of our members, contribute as well. That's thetradingroom.com.
Well, welcome to the blogosphere. I'm surprised that URL was available. You snagged a good one there. But yeah, I'm checking it out right now. So listeners, you can check that out as well and see what Joe and the gang have going on at thetradingroom.com. A lot of places to catch up with Joe and the rest of the team. And of course, check out that webinar this week. You can find the link, like I said, on our site or on the RCM website as well. And Joe, thanks again for coming on. We'll have to bring you on again down the road to discuss some of these strategies and some of these analytics and some of these CTA type things in a little bit more detail down the road.
All right. Thank you, Mark, Andrew, and Mike.
Thank you, Joe. It was very informative.
Yeah, thank you, Joe. All right, have a good day.
All right, and that's going to do it for the interview block. And now we'll get started with the show proper with our favorite segment, or at least one of our favorite segments, the trading block.
The trading block.
All right, and welcome to the trading block. This is, of course, the portion of the show where we break down what's going on in the old markets today. And as I alluded to in the interview block, we are recording on yet another day when the markets are just seeing no end to the rally. Most of the major indices up about 0.3% on the day today, with the Dow leading the charge yet again, up nearly 0.5%, setting yet another all-time high. Just no end to the Dow love these days. So perhaps we'll start there because, as is our wont here on the show, we like to delve into the options realm, the options developments that come off of these underlying swings and movements. And I'm sure listeners, if you turned on any major financial media outlet over the past few days, you've heard nothing but VIX is down, volatility is down, volatility is down. We're hearing it again today. VIX cash as we speak, closing at 11.56. I almost did the dollars, Andrew.
Yeah.
I was very close. I almost got into the dollars. I haven't done that one in a while. But yes, the VIX cash closing today at 11.56, down another handle on the day today. And of course, all the outlets lighting up with the fact that here we are back in the 11 handle. Haven't seen the 11 handle since April of 2007. So pretty much across the board, VIX cash, fair gauge, etc., lowest since April of 2007. I almost hate to even delve into that because we talked so many times on this show about the contextual nature of volatility and how just looking at the VIX cash by itself is really, really almost meaningless. You really need to take in the full gauge of what's going on in the marketplace. But nonetheless, because everyone else is beating that drum, we should at least teach them how to beat it correctly. So, Andrew, what's the first thing that drives you crazy, or perhaps what drives you the most crazy when you hear everyone out there right now running around saying VIX cash, VIX lowest since April of 2007? What's the first thing you want to say to those people?
The first thing I want to say, actually, is it's too cheap.
You don't want to correct them. You just want to say buy it. That's what you want to say.
The only thing is the realized volatility stepped up a little bit. And this is actually one of the first times I think we've had this year where the realized volatility is going up. And this is taking a play from Don's playbook, but realized vol is going up and implied volatility is coming down, which right now I think they're finally hitting the downside, and the SPX hitting some downside puts. And, that's what you need. We had a couple of short vol positions. I was not expecting, thought we would kind of maybe get to like the 12 handle this week at some point. But I actually closed short vol positions today. I'm like, what am I going to do? 11 and a half. We only have 11 more points to go.
Yeah, I think on a recent show, we did kind of joke, maybe VIX will hit the 12 handle sometime in the near future. And I don't think any of us thought VIX cash would be plunging to these depths so quickly.
Yes, this could be the great Steve Flatner. It was 11.56.
Are people still looking at the VIX in any capacity?
You know what? I guess they do. Because that's the only thing they can talk about with volatility. Oh, it's down. Oh, it's up. But it is a very. I just think just relative to movement, it is. I don't think it's that expensive. The problem is the future market not quite agreeing with it. So, all the futures at price volatility are still a little high. With what do we have? Next Wednesday morning is VIX expiration. So we have 8 days, and there's $1.50 of premium in the futures. So, which is about 75 cents at least too much on average. So not everybody is buying, our VIX closing price, because it closed, front month future closed right around, I'm looking at it now, right around $13, which is about $1.50 over. So the market for the actual market for the futures is still kind of bid.
No surprise there. That tends to be par for the course for the most part, and probably a little more sensible than what we're seeing going on in cash land.
Yeah, they are just crushing at the money options. Like the market is never going to move again. So I think it's almost like every 50 cents we go up in the SPY, it's like, okay, that's 15 more cents we can't go up. So they're taking the at the money straddle with 2 weeks to go is going to trade like 25 cents at this rate. And at that point, I think I'll go buy it.
I think you might want to buy a few of those, I think.
You might want to buy a couple.
Just a couple. Put them away for the rainy day at Kids College Fund.
But they are smacking options. There's no question about it. And
it's not too often on this show we say that implied is looking comparatively cheap compared to realized, but it's starting to get into that realm with the way you're right, with the way they're crushing these at the monies out there. It's still more than realized, but that premium is probably at an all-time low right now. And it always cracks me up that we see this quite a bit in these upside environments. And I always joke, really only half jokingly, that these vol traders really don't understand basic math, but they tend to forget that concept that, vol to the upside is still vol. It's still movement. It still counts. And yet, they discount it so aggressively. It kind of cracks me up. So we'll see. We keep seeing extended volatility to the upside, extended movement to the upside, extended realized vol to the upside. It's going to become a point where this is going to become a screaming buy. I don't think we're there yet, but we're getting down that road.
Yeah, we're looking at single-digit volatility here for some of these options, which is I mean, 2 weeks ago you'd say single-digit volatility, but that's almost down. That's almost down 50% from when we had just because Berlusconi got elected, right? The running joke is, when did anybody care who got elected in Italy?
Yeah, I know.
And apparently the answer is, I guess we still don't care. We care for one day, but not anymore, Matt.
Now, Mr. Federal Holiday Mike, obviously you're on the phones a lot with all the retail clientele all day long. What are they calling you up and beating your head in about today? Are they going on about volatility? Are they going on about upside? They want to know what's going on in the commodities. What are your clientele really focused on these days?
Yeah, most of the people that we're getting calls from, in the past, we'll call it 10 years ago, when you climb this wall of worry in the equity markets, where you're on CNBC, they've got a little countdown to on the S&P, 6 points away from the October 2007 all-time highs in the S&P, and they've got like an updated ticker on the Dow. A lot of times the people would call in and say, I don't want to buy it here, but go ahead and buy it here. And they call it the wall of worry. We're fielding less of those calls, and the traditional wealth management clients that we've dealt with are kind of looking at, hey, you know what? Let's not look at a 30, 20, 15-year plan. Let's shore up everything and kind of take advantage of this rally to start looking at ways to generate income when it's up here by selling calls, buying puts to hedge the downside. But there's not a whole lot of conversation centered around on just getting outright long the marketplace at these levels. And there's not a lot of concern about buying VIX calls or, selling the VIX puts or getting long the VIX futures. People aren't just looking at this stuff the way they used to. I think a lot of people are looking at, Apple keeps coming up. I'm sure as is the talk in many shops across the land here, the Apple predicament, the stock market's making new highs and now Apple's not part of it. People are looking at, well, what am I going to do to reach my longer term entitlements or longer term distributions for my retirement? And for the first time, people are starting to say, hey, let's look at stuff that leaves the core of my knowledge and core of my typical investment portfolio, and let's go explore into different avenues, whether it's managed futures or adding option strategies to the portfolio. We're seeing a lot of different things, but they're not the traditional conversations we've had in the past.
I should know that your clientele would be probably a little bit more relaxed in this environment than others, because you guys hedge so aggressively and so frequently over there at KYO/RCM that I think they'll probably be sleeping a little easier than some of the other clients out there who are just whose advisors have them naked long everything right now.
Yeah, I mean, that's the predicament. If you're naked long right now, it's just at which point do you start shifting to a more cash friendly or more bond friendly? I mean, bonds are scaring the retail investors probably more than the equities. People locking into bonds right now are worried that if interest rates go up, what does that mean for my portfolio of bonds? And if anything, the word on the street is, these master limited partnerships and REITs are becoming all the rage. And it's something that we haven't completely bought into. If we see a good deal, we might take a look at it. But I fear that there's another, the new product that came out where people are like, well, I don't want to invest in the stock market here. It's too high. Okay, well, we got these bonds. Well, if interest rates go up, I don't know if I want to be in bonds. Well, then I got the perfect thing for you. It's an MLP. I just don't know where the next one is, but something's got to give. When the market makes a run like this, even a year ago with volatility and where the S&P was, I mean, we're butting up on numbers that I would have argued against seeing, but now that we're here, it's hard to say that it's going to stop. But at some point, it always has.
Yeah, exactly. And, you mentioned the new products. That's an interesting segue, because I was going to toss to the Viceroy, a.k.a. Alex here, about the minis, which are launching, I believe, next week, and seeing what's going on over in OX land to prep for those and get those ready. Those are, of course, I think on everyone's minds. People have been talking about them since last April or May in the OIC conference, and they were first being bandied about, and they got approved end of last year, and people have been waiting for this launch date to approach. So hopefully at least a few brokers will be on the ball and be able to get those ready for the launch date. I know SIBO has already announced they're going to list them as well. Along with the ISC, I expect most of the exchanges will jump on board that bandwagon, because if anything's going to light this retail fire and get them back in the game, allow them to trade things like Apple and other things again, is going to be those mini contracts. So we'll have to wait perhaps until Thursday when Mr. Alex can come on and tell us what's going on in the land of OX regarding the preparations for the impending mini launch. Speaking of the exchanges, one last thing here before we wrap up the old trading block and dive into the odd block. We talk a lot about the exchanges here on this program. Well, the ISE, the International Securities Exchange, quite frequently the perennial number 2 there in the options business, number 1 sometimes in the equity option space, going back and forth with the CBOE. They just announced finally, after long rumors, you guys are going to like this one, Andrew and Mike. They announced they're going to launch their second exchange, which would make, I believe, the 12th overall exchange in the business now, and they're calling it the Topaz Exchange.
What?
Yeah, that's what the ISE's next exchange is going to be. And I don't think that's not a code name. I think that's the name. So yes, Topaz Exchange. You'll be routing to the Topaz soon.
It'll be
Okay,
like a
hold
blue
on.
necklace.
How much money did it cost the ISE for a marketing firm to come up with the Topaz Exchange?
You gotta wonder. This is a firm that's had some issues of late, needs to husband their resources, and they apparently blew some, at least, on someone coming up with Topaz. It's memorable. You don't see that anywhere else. I guess I can give it points for that. It stands out from the crowd. But yeah, Topaz, I don't know. I'm not sure what's more memorable. The fact that it's a new exchange, which has kind of been there, done that now. I think the name is probably the most memorable part of it.
Jeez Louise.
Topaz.
It's a total, okay, the ship has sailed. The ISE was the new exchange. They went public, made lots of money, but is any new exchanges making any money since then? No, I can't imagine.
They're part of Eurex now, so that had to run up the whole Eurex chain, I'm sure, and perhaps someone over there in Frankfurt had the final say. Perhaps Topaz has more resonance overseas than it does here. I don't know, but
maybe it sounds good in German.
Yeah, exactly. When you hear it in the native mother tongue, it has, because German, what doesn't sound better in German?
I know. Topaz what's
the language of romance.
Exactly. By the way, and we called the fact, actually you did, I think, that Apple will be in the ash can by the time they list the minis on it. It's almost like when there's so much retail interest for a product, by the time they finally list it,
yeah,
the underlying product is in the can.
Some of the need has gone a little bit by the wayside now. So I guess one of my predictions, if I keep chopping at Apple, it's bound to come true, right? So it finally did. But yes, that's interesting. Some of the demand, you're right. This was Apple 700 racing towards 1,000 like it was a few months back. A different story. Of course, we still have Amazon. We have Google breaking the 800 level now, so that becomes a better argument for the minis. I mean, Apple has been the poster boy. I think that's probably going to shift as things develop into Google and some others. Maybe we'll see some Buffett ones. I think you need 1/1000th side for the Buffett options, though. All right, and that is going to do it for the trading block, and now we're going to roll into a really quick odd block, one big trade I think we all want to hit on here because it's so interesting, so we'll get right to it.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, and welcome to the Odd Block. This is, of course, where Andrew and I, and occasionally some of the other panelists, like good old Federal Holiday Mike, if they are so inclined, don their fedoras, and we dive into the seamier side of the options business. And today, there was some interesting stuff going on in the name we like to discuss quite a bit here on the show, particularly of late. That is Ford. Ford rallying nearly 3% on the day, closing at $13.34. Just a lot of love pouring Ford's way of late. They usually do about 160,000 contracts a day. Lately, they did over almost 250,000 contracts today. So just a ton of volume. Lighten up the tape in Ford today. And a lot of that volume coming in one just ridiculous trade going up here in the March 13 halves. Andrew, why don't you tell the folks what lit up your personal tape today over there in Ford?
Of course, I have Ford on my list ever since Mr. Tusaw is perennially short the 12 puts, which seemed pretty good. But at some point, like I was talking about with like Zynga back, where the market actually starts going up, instead of just going sideways. So sometimes you have to add a call with the short puts so you can make some dough.
You should have been a man like me and just sold the 13 puts back when the stock was around 12 something. See, that's the men sell something with a little bit of meat in it.
Exactly. I'm selling those in the money puts.
There we go. He's not here to defend himself, so I can mock.
No, I know. I totally am bashing on him, and he does some smart stuff. But he's not here. Kavanaugh's here, so Kavanaugh will have to defend him.
Sell more puts.
Sell more puts. This was like one of the classic, I would say, option block trades, where the March 13.5 calls expiring this Monday, or sorry, this Saturday, but Friday for everybody that is scoring at home. The March 13.5 calls trade 2 cents in a 25,000 contract block. And probably before the ink left the paper, they were already 6 cents bid. So customer paid 2 cents, and one of those get it rich stories they're now closed about 7 cents. So he's up a nickel on 25,000 contracts. That's pretty good.
Not bad for a few minutes work.
No, and they pile on. 25,000 traded by the end of the day, though 45,000 traded. So everybody else was buying them as well.
Maybe he just took his chance to get the hell out of Dodge. He said, "I got my 3X. I'll be done."
Exactly.
If that is the case, if he can execute like that and get in and out and get all that size done, I take my hat off to him. That's a fantabulous trade. Sounds like an RCM type execution, Mr.
I think it was. It was an RCM.
I wish we had that kind of skill. It sounds. I didn't hear anything about this till right now. I'm going to see if I can find anything, but that's just a speculative play, I would guess. I just don't, we don't really advise people on those kind of strategies, but hey, more power to the person that was able to pull that one off.
Yeah, it's impressive on several levels. You don't have to like the underlying thought behind it to appreciate how it was done.
I don't know when the last time Ford moved 34 cents in a day.
I know. This is. I mean, it's interesting. All the news come out of Ford lately, recalling 250,000 minivans, recalling this, recalling that. Yet the stock is up aggressively over the last week or two, and they must know that I'm heavily shorting Ford these days, so that's why it's turning around and rallying every chance it can get.
I mean, it traded 12. It traded 12.90 today, and then traded almost 13.40 at one point. That is nuts for Ford.
That is. I mean, this is a stock that's been hanging around the 9 handle for the better part of most of the last year or two, with some brief dalliances up to like 11, then back down to 9, and then 13 a while back, and then coming off again, but yeah, for the most part, it's been particularly range bound in that 9 to 11, maybe upside 12 range. And then all of a sudden, we're just off to the races, which is again why Uncle Mike needs to sell some meteor puts.
Yes, let's see if he will. Let's see if he'll step up and sell the 12.5.
Yeah.
I'll bet you he doesn't.
He'll sell those. He'll sell those good old tasty 10.5s.
Exactly.
Put some skin in the game.
A very interesting trade I thought today, and this just looked like a closing transaction to me in the VIX. By the way, the cool thing about that Ford trade is their open interest was only 50 contracts before.
Oh yeah, I forgot to mention that. There was nobody playing on that strike but him today.
Nobody cared. Okay. And in VIX, the March 18 calls traded 14 cents 20,000 times this morning, actually. And by the time I think the more paper went up, I'm sure about 35 or 40,000 traded here. I mean, the VIX trades a lot of volume, about 500,000 contracts a day. And this to me just looked like a closing trade. You sell some out of the money calls in the VIX, they finally come in, and you just close the trade. And I think you're going to see a lot of that kind of paper going up. So if people are looking to buy the bottom in the VIX, I don't think that's what the paper's doing. I think the paper is closing their short calls.
He's taking his ball and going home. He made some money already.
Yeah, I know.
He's been listening to this show, and he said, it's going south, or perhaps vol views. And he said, it's going south. I'm going to do what those guys say. I'm going to dump some upside in VIX, and now he's just reaping the rewards.
And it's that easy. You just sell the naked VIX calls and you buy them back.
That's all. You don't need to know anything else about futures or rolls or any of that kind of fun stuff. Yeah.
That's all a waste of time.
Of course, this gets into what we've been saying a number of times when you're trading VIX, regardless of what you're doing. This guy probably has heard us as well. Close it the heck off before settlement. You don't want to mess around with that stuff coming up next week. So he's probably seeing that the stuff's drifting his way. Close it out. Why mess around with the final week? Because that's when a lot of the crazy stuff starts coming into VIX land.
Yeah, I mean, because you think about it, the March 18 calls in the VIX on last Monday were probably like $3 bid. When the volatility just erupted for that one day.
Exactly.
So he's like, okay, I made $3 and I'll get back 14 cents to close, which is what kind of the transaction felt like. So
this guy saw that VIX squeeze, sold it aggressively, and is reaping the rewards.
Bully for him. I think that was a nice little
We
trade.
tip our fedoras to you, sir, and whoever the broker is who executed that forward trade. Well done on both accounts, and the customer, of course, too, did all right, looks like, in forward as well. So some winners in the old odd block today. I mean, of course, nothing's going to compare to that trade we had a couple weeks ago. What was that? GTZ? What name was it again? It was like 5 cents to $9 overnight.
Oh, no, pretty amazing.
We need to highlight that one again. That was a quality one. But that's all the time we have, unfortunately, for the odd block. And I think we're going to roll into a really quick around the block.
Around the block.
All right, this is what happens when we have a great interview segment, is that the show tends to run a little bit long, but none of us here mind because we love bringing you this great content, dear listener. And, of course, here we are on the odd block talking about what we're watching, what's catching our eye. And, Mr. Andrew, what are you watching over there in the land of the pit?
Well, obviously, we're watching volatility, how low it can go. There's some fun little trades there as the VIX winds down. And also some strange stuff like the XLF, like China, how this little sell-off here just recently is kind of Korea-related. So just, some funky speculation, nothing too huge, but I'm definitely not getting in the way of the market going up. Let's just put it that way. So, I think, it can keep going higher. We can go through fits and starts, but the more things look more stable, I think just the better the market will do. Just, we have had too long a period of everybody getting beaten over the head by problems, and I wonder how high it can go before probably somebody steps in and sells it. But as for right now, I'm just kind of enjoying the ride.
All right, Mr. Federal Holiday Mike, and since it has been far too long since you have graced us on the Around the Block, I will give you pride of place. What is catching your eye? What is going on? What is on the old screens over there in RCM land?
Well, we're all over here with our noisemakers and our party hats waiting for the S&P to hit all-time highs. We're just glued to the television. Outside of that, we've got an Ask the Experts panel coming up on March 22nd. We're going to have some corporate attorneys, corporate accountants, just sharing thoughts and ideas on what they're seeing and how they've maneuvered into different investments with their clients over the last year and a half or so. A blast from the past here, one of the stocks that we'd watched in the past and was mentioned on this show, the Manitowoc company, MTW, hit $20 today for the first time since its debacled hedge in 2008.
Remind me of the ticker symbol again.
MTW, Mike Tango Whiskey.
Yeah, trading closed at $19.91. Look at this chart, just straight up since we talked about this name last. They must have heard us.
Pretty much, yeah. So that was a headliner this morning in the office. But keeping our eyes on Apple still. We've got a lot of clients that we're fortunate enough to be hedged and got out at the tail end of last year. But since then, we've picked up some new clients, and it's just a stock that a lot of people don't even know how much exposure they have to Apple, because you look at some of the mutual funds they have from different 529 plans to their longer term investments in their 401ks that their company's managing, and Apple's everywhere, and it's still kind of just sitting on the forefront of everybody's mind that it's bound and destined to go back up to 600. And we don't know if it's going to get there. All we ask our clients is what if it doesn't, and how do we hedge it? So that's what's been keeping us busy.
Before we go, as always, I like to check in with my cohorts, my partners in crime, to see what they have cooking in their respective necks of the woods. Starting off with you, Mr. Andrew, what is coming up in the land of OptionPit.com?
If you like the odd block, if you like looking at order flow, we are actually on Wednesday going to do a webinar about reading order flow, using all the little tools and tricks we have at OptionPit. Some live vol stuff, some stuff from Option Vision, a little here, a little there. and how we actually look at volume, and then how we take that volume and create a trade out of it. So it's not always, hint, hint, you just don't always go buy what the other guy bought before you for a better, for a worse price. You try to look for a way to try to grab some vol edge and make it all work out.
Oh, that's what I've been doing wrong all this time. Now
I know.
Now
I
see
that stuff. I
just follow the leader, right into the odd block every time. It doesn't really work out that well. I never could figure out why. I should listen to my own odd block sometimes.
So, and then Mark will be doing how to trade cover calls the week after on the 21st. So these are free. Sign up, though, because we already have a ton of registrations. So if you want to get in, I recommend you sign up, or you are going to be left out in the cold.
All right. Thank you for that. And last but certainly not least, I know, Mr. Federal Holiday Mike, you teased that you have, of course, the webinar coming up later this week with Joe and the folks over there at Rios Quantitative. So if you want to check that out, they can surf on over to RCM. Is it RCM AM?
Yeah, the RCM FS site is not up yet. We should have it up by the end of the month. It's just been a wonderful joy of not having a website here in the financial services industry for the last couple of weeks. But yeah, they can go to RCM AM and it should be listed on the site. If not, info@rcmfs.com, and that's Reliance Capital Markets Financial Services.com. We'll be able to email you the info for the much to-do webinar with Joe Rios from Rios Quant on Thursday.
So if you like what you heard today, you want to hear some more, hear what the guys at Rios have cooking in their neck of the woods and what they may be able to teach you and tell you about their products and about the markets in general and about timing and all that fun stuff, fundamental technical analysis, then tune in on Thursday and check it out. We hopefully will have a link on the Options Insider as well, so make it easier for you guys to register. And last but certainly not least, I want to remind you, the listener, about the Options News Rundown, the latest addition to our program. So by all means, if you haven't checked it out, surf on over to our website or to iTunes and check it out for yourself. And one last note as well, I know a lot of you have written in and contacted us and started registering for our event on March 27th, the Unusual Activity Forum, so much so, and a lot of you have written in looking for some interesting things that we thought will make it easier to accommodate all of you, and we'll move it out a little bit until May to make it a bigger, larger, more focused event on what you guys want. So in order to accommodate all of your inquiries and questions and suggestions, we're doing exactly what you asked. We're rolling it out to May. So we'll update the website soon. If you have registered already, we will certainly honor those for May. If not, just let us know and we'll adjust your registration accordingly. And if you haven't, by all means, surf on over to theoptionsinsider.com/events. That page will have more information on that soon about the updated date and time and who we're adding to the guest roster and all that fun stuff, as well as all the fun and fabulous freebies that we're including in there. It's getting ridiculous, this show, Uncle Mike. We're keeping with our mantra of the Options Insider. You can't do an event for free. It's kind of hard, but we're making darn sure that people get way more than they pay for when they come to this event. So it should be pretty good.
You're going to overvalue them.
Yes, that's kind of what we do here. So we're keeping with that, and it should be kind of fun. So look for that, listeners, at theoptionsinsider.com/events. And on behalf of all of us here on the Option Block All-Star Panel, I want to thank all of you guys out there in the listening audience for downloading and streaming and subscribing and attending webinars and writing into the show and doing all that great stuff you do to keep this show running. And we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.